Hi everyone, in this video I'm going to show you my high time frame, medium time frame and low time frame bullish and bearish Elliott wave scenarios, and I'm going to do so in a lot of detail as I'm going to show you my exact Fibonacci, trend-based fib extension as well as fib time pools, so that hopefully you can get as much knowledge and insight about Elliott waves as I can deliver to you in this video, and maybe you can implement some in your own charts today. That being said, if you want a short and concise update about the Bitcoin price and the Elliott wave scenarios I have on all the different time frames, click on the card popping up at the right top of your screen, as this video is going to be a little bit longer, both educational as well as very informative, because I will run through all the scenarios. So let's start on the high time frame with the, I say bullish count, but it's eventually bearish, as wave C over here at the bottom is not finished. But over here you can see it's a three wave for me in the A, followed by an expanded flat in the red B, and then eventually wave C to the downside. And the reason I call this a high time frame bullish count at the moment is that for me this is a wave 1, 2, 3, 4, 5, where wave 5 is not yet finished. Now, if we look towards an expanded flat, this being an expanded flat, we're looking for an A, B going below the origin of wave A, and then eventually C should end up above the high of wave A. Now, if we go and check where wave B eventually ended up, we can see that wave B perfectly ended or bounced basically on the level it is supposed to, which is at the 1.236 and the 1.38 Fibonacci. This is the target area for an expanded flat wave B. So perfectly price bounced over there. Now then, if we zoom in just a little bit, you can see that price did not yet reach the rare wave C target as well as the common wave C target. Now, how do you know what's common and what's rare? Of course, you can educate yourself online, and I will put two links in the description that I think are very useful for you if you want to educate yourself more about Elliott waves. However, this Fibonacci pool over here, the 1.618, which is the same pool as the 1.38 here and the 1.236, this is the pool that you take from the high of A to the low of B. So pull a Fibonacci from the high of A to the low of B, put it on these fibs over here, and this is a very common target for wave C, as well as the trend-based fib extension 1.618 that you pull from the low here of this red A to the high of A to then the low of B, and then you put on the 1.618, and then the area between the 1.618 and the 1.38 fib trend based extension, that is the rare target, which in this case is between 25.4 and 27.7, with then the common area being between 27.7 and 34.1. Now, as you can see, I also have two wide Fibonacci pools over here. And those pools are basically from the beginning of the red A all the way up at the all-time high to the low of this red A. Now, as you can see, and I think that's very important to note, is that I'm on a high time frame and I'm on log scale. If you do any analysis with Elliott waves as well on higher time frames, make sure to toggle on here the log scale. And also, if you do anything with Fibonacci or trend-based fib extensions, make sure to toggle on this one over here, fib levels based on log scale, so that everything is in line with each other. So that being said, you can see also that I have a 3.618 over here, trend-based fib extension, and that is quite an extended target for a wave 3. So over here we have wave 1, 2, and then eventually wave 3 all the way up. Now, based on knowledge, the minimum target for wave 3 is the 1.618 trend-based fib extension pulled from the low of B to the high of 1 to the low of 2. And out of my head, that must be somewhere over here. The 2.618 is probably somewhere around here, and then the 3.618 is where we actually found a lot of respect, as you can see by the wicks, but not closing a daily candle above that level. And due to it being so well respected, as well as the local low time frame counts that I won't go into in this video, because this low time frame count takes a lot of time, but therefore for me this looks like a very nice wave 3. And then the blue count is a 1, 2, 3, 4, and then the last 5 wave up over here for me is then the high of 3. Now, in a wave 4, price tends to not go below the 0.5 Fibonacci, hence the reason that I put the invalidation of this scenario at the moment at 20.3K. Now, if this is the high of 3, then I am looking for a wave 4 to form, which in my opinion currently might indeed be the case. Now, the most common wave 4 pattern is an expanded flat, which means it's a three wave taking the highs once more, a C wave down, and then eventually moving up for wave 5. However, wave 4 can have many different complex scenarios and complex Elliott wave counts. Usually wave 4 is the most difficult to trade due to a lot of things being very unexpected, as well as actually the dump of last night. Honestly, I didn't see that one coming. I was bearish, but I didn't see such a drop coming. And as you can see, I selected these fibs over here. Now the white lines, the white fibs are taken from the low of 2 to the high of the green wave 3 over here, again on log scale. And this is the target area for a wave 4. So between the 0.236 all the way till the 0.5, the most common two are price action ending in a wave 4 between the 0.382 and the 0.5. And I gotta say that the 0.382 has very nice confluence with the low over here. And the low over here, of course, has some liquidity, like people with their stop losses there or whatnot. So actually, eventually, even if we go up or whatnot, whatever happens, having a wave 4 that is going to take this low and then move to the upside would actually be a nice scenario. Finally, you also see two colors of fib times on the chart, and I'm going to actually put the trend line of the yellow one as well as the green one on the chart over here so that you can see what I did. So the yellow one is over here. So the yellow one starts, well, wherever the end of wave 1 is. I currently have it over here. But then it's basically, the yellow one shows the length of the correction of wave 2 compared to 4. So the 1-to-1 over here in fib time basically shows the length of the correction, the time it took for wave 2 compared to wave 3. So as you can see, we're already, like wave 4 is already 1 day longer than the correction we had in wave 2 if the high of 1 was over here. If we look at the green line, however, and let me remove therefore the yellow trend-based line to make it a little bit more clear as well. So if we look at the green line, then, and this is important, guys, I want to stress this, like fib time is a very unique way of calculating Elliott waves. And when you use fib time in this scenario for wave 4, there's two ways you can try to estimate the time a wave 4 can take. The first one is you compare wave 2 with the wave 4. So what I just explained is the length of wave 2 can be similar to wave 4. However, the rule of alternation in Elliott waves, a part of that rule says that if wave 2 usually is quite sharp and short, while wave 4 is quite often more horizontal as well as like sideways, and it takes longer. So it's a longer correction, which in this case is going to be true if we look at the yellow line. So you can compare wave 2 with wave 4. That's one way to figure out a fib time for wave 4. But the other one, which very often is forgotten, is that the beginning of wave 3, here at the bottom at 2, all the way to the high of wave 3 is also a fib time pool for wave 4, maybe even more important. So you take a fib pool, you click at the low of 2, you click twice at the high of 3, and the correction of wave 4 tends to be close to the same length of the impulsive wave prior to the wave 4, or the corrective wave in this case, so wave 3. Now, as you can see, I also have the 0.618, which is quite a common target. So for wave 4, this area over here is quite common. Wave 4 can even take longer than the impulse wave, like even longer than the 1-to-1, but at this moment in time, the correction of wave 2, the yellow line is over here, so I thought it was nice to put this 0.618 and the 1-to-1 over here. So this is why I think the high time frame count is what it is at the moment. Besides, we have some nice resistance over here, which I think would be a brilliant support resistance flip. We move to the upside, actually upside, support, support, move up, eventually range a little bit, and we continue to the downside. However, we never backtested this area. So I think it would be actually very, very nice to backtest this area and then drop once more for this wave C to the downside. So let's go to the bearish scenario. And the bearish scenario over here, so I won't go into this area as I've just done that. There's not too much to say with the bearish scenario because I've already said everything in the scenario prior. But over here, 1, 2, 3, 4, 5 is already finished. So basically wave C is in, the higher B is in, wave 5 is in, and we're looking for price to move to the downside to take at least at a bare minimum these lows over here. Now what is important is if this is the high of the B wave, then where could C end up? And you can see I have a 1-to-1 over here as well as a 0.618. And let's start with the 0.618, and I'll put the trend line on my chart once again. And you can see that the 0.618 is a trend-based fib extension I got from the high over here to the low of A to then the high of B. Now, if this is a 3-wave structure followed by a 3-wave and then another 3-wave in the C, usually the trend-based fib extension target can be the 1-to-1, which can be a lot lower. Let's actually check. Like if we check the 1-to-1, where is it going to be? It's going to be at about like 6.5k. However, when I look at structure as well, and I look at the support area that we have over here, for example, we never backtested this area as well. So I think that would be quite a nice area to backtest. Besides, this has also great confluence with the area over here. So that's why I believe the 10 to like 12 or 13k area is going to be a very important area for Bitcoin. And also in this 3-wave scenario, the 0.618 is also a valid target, which sits at about 10.8k. Now the 1-to-1 is, let's see why I have this one. So let me remove this one actually. Not the trend base, but the lines. So if we look at the 1-to-1, then apparently this one that was for A, so this one is not relevant. So only the 0.618 is relevant in this case. So that's an interesting target for a wave C, besides then of course having this area over here, which I think is going to be a very interesting area for a potential backtest and support. That being said, on the high time frame bearish count, then we go to the more medium time frame counts, which I think are always very interesting. So the yellow fibs that you see over here are the white ones on the high time frame count. So basically these are the targets for a wave 4, but then in the colors of the count. So wave 2 all the way to wave 3, pull the Fibonacci, put them on log scale, and then these are the fibs that you're getting. Now if we then zoom in just a little bit, you can see that I have this first scenario where this is a WXY, which then is a green W or a green A. So then we have a W or A, X or B, followed by a C or Y, ending wave 4 in between somewhere the 0.5 and the 0.382 before then moving to the upside for a potential wave 5 to the targets already mentioned. Now, if we zoom in just a little bit, the scenario that I have on my chart right now, which I don't know if, we don't have enough price action, but it doesn't look that great, honestly, because if this is the first 3-wave for an A, and this is then an A-B expanded flat in the B, and as you can see, these Fibonacci's are taken from the low of Y to the high of A, so this is the target area, or can be a support area for wave B. You can see that wave B, it went all the way to the 1.618, and the usual is the 1.236 and the 1.38. And it actually went below that. So it's quite low. Besides, I think we might dip down once more and then eventually maybe move up. So this is not necessarily my preferred scenario, but for now it's just a scenario I have on my count, because with Elliott waves you need different scenarios. Also, wave A is very short compared to this wave C, and then you would eventually expect a very explosive move to the upside for potentially a wave C. Now a target again for the wave C, in this case that's an extended target for the wave C. So the most common is the 1.618 fib trend based extension, as well as in between this area for a C, so basically this area over here. But the 2.618 is a very extended target for the C, which is pulled from the low of Y to the high of A to then the low of B. Toggle on the 2.618 and you'll get this target at about 24.5k, but this whole area is okay. However, if I like, the most common target for a potential wave C is it's not even taking the highs. And again, a requirement for wave C, it's just you got to go above the highs, man. So this doesn't look nice. The 1.618 is even below the high of A over here, so therefore it's just not my preferred scenario, as you can imagine, but it is one I have on my chart. The other one is actually quite similar, but then I have over here a W, X, Y, X, Z. So basically this is a 5-wave structure instead of a 3-wave structure. And I think it's important to note that the minimum target for a wave X is hitting the 0.5 of the previous wave then. So over here, the 0.5 is a minimum target for wave X, and it actually hit it. So this is still quite legit, but again, this part here, I'm not too sure. Then we go to the third scenario, and now you can see I also have a channel on my chart. Now channels with Elliott waves, I actually forgot to mention, but channels are very, very important in Elliott waves for impulsive counts as well as for corrections. And also if you click on the links below in the description, like the educational links, you will see, especially with the more complex website, which I will note down in the description, you can see that they also have a lot of channels in all their examples and the pictures that they have. So in this case, I do have a channel which basically goes from W to Y and then to the high of X over here. And wave Z is down here. So this is a W, X, Y, X, Z. And as you can see, X over here is again hitting the 0.5. So this is still a very valid Elliott wave count. And I will put the trend line off here because it, as you can see, is getting quite cluttery on my chart. And if I don't like something, it's having too much clutter. So if we zoom in a little bit, we can see this very impulsive move to the downside. And over here, one could say, okay, this is maybe some sort of an A, then we have, right, the B, or an A, B, C, just like actually in the previous medium time frame scenario. And in this case, you can see the 2.618 extension, because if this move down is an A, B, and then eventually a C, that also means that in this wave B, it needs to be a 3-wave, because this is then a 3-wave A, 3-wave B. And if that is a 3-wave B, that means that this is an expanded flat B, an A, B expanded, and then eventually a C. And then the C is going all the way down to the 2.618. Again, that is very, very rare. So also, therefore, this being some sort of an A, or let me remove this, this being some sort of an A, B, C is therefore just not my preferred scenario. And maybe more preferable is that this is somehow an impulsive count, like in 1, 2, 3, 4, 5, before then getting another move up, another move down, taking some lows and stuff, and then move up for a wave 5. But we'll see what price does, right? We take it as it comes. We can't influence price. We can only try to play the probabilities in our favor. Now again, the green lines you see over here are the fibs taken from the low of the higher time frame wave 2 to the high of 3 up there. You see down here, and that is important though, a 1 and a 1.236 Fibonacci. Those are trend-based fib extensions taken from the high of 3 to the low of W to then the high of X over here. So you're basically comparing wave W with wave X. And as you can see, we found currently support on the 1-to-1. But this target in general is a very legit target for a wave Z. And what I really like is that it also has a very nice confluence with my target box over here. So you can see there's a time naked point of control, there's a weekly and a daily at exactly the same level, and a daily naked point of control as well. So I really like this level, and what you can see as well, we didn't yet hit it. So we're just shy of hitting this target box and these levels, but I would expect them to hit, or what would also be nice, honestly, is the yellow target box that you see over here. Let me actually move this. Is a very nice target as well. And as you can see, it's in between the 0.382 and the 0.5. I think for a Z that might be too deep, but nonetheless, whatever the correction is going to be in this wave 4, this is another target area that I have with a weekly naked point of control, a daily naked point of control too actually, and another daily in here as well. So this is a nice area of support. It's also below these lows, so you take the liquidity. So all in all, these two areas are quite nice areas Elliott wave wise. And yeah, we got to see what happens. If we look at the channel, it would actually be nice if wave Z eventually, maybe we go down a little bit, move up, blah, 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 whatever happens here, and then move down when we are crossing the channel through the blue target box. Would be nice for a bounce, would be some nice confluence. But again, we'll see what happens. And of course, with all the updates I'm giving you, you guys will be the first to know whenever anything changes in my counts. Then we have a very bearish count over here. Not too much TA technical analysis going on over here. because, well, if this is the end with an ending diagonal, then this is a 1-2-1-2 scenario where this blue wave 2 is not allowed to go above the high of this wave 2, which in this case didn't happen. So the invalidation is still here, and maybe I should actually move the invalidation down to this high now. Got to zoom in just a little bit in order to get the right high there. We did have a nice, this is a fib pull from the high of 2 to the low of 1, and the wave 2 tends to end between the 0.618 and the 786. However, the targets from the 0.5 all the way to the 786 is very legit for a wave 2. And actually, yeah, we moved to the downside. So this could be the beginning then of a very impulsive wave 3 to the downside. However, there's one thing I don't like about this count, and I actually highlighted it in an earlier video, which is this triangle over here. This wave 4, because a triangle, guys, a triangle can only exist in a wave B of an ABC, a wave X of a WXY, a wave Y of a WXI, or a wave Z of a WXYXZ, or a wave 4 of an impulse. So if this is somehow an impulse, then this triangle needs to be in one of the, well, different scenarios I just mentioned. But if this is an impulse, it needs to be in a 4. But what you can see is that this triangle is then super long in time compared to the very small 2. And yes, I explained that wave 4 tends to be longer, but this is quite extreme. This is very, very extreme. So very uncommon, and therefore definitely not a scenario that I currently prefer. Of course, it's possible. That's why I have it on my chart. But yeah, it's not preferred. You do see the 1.618, which if this is a wave 3 to the downside, so then a blue 1, a blue 2, and then eventually a wave 3, then this target for a wave 3 has to be reached at least by a bare minimum. But we'll see if we continue pushing with a lot of volume to the downside. And then finally, let's go to the low time frame. And then this is the low time frame scenario that I have at the moment. This is one of the two scenarios. So this is the ABC scenario that I explained earlier in the medium time frame count, with the 2.618 here being a target, which is very extended for a wave 4. I have two fib pulls over here taken from this white 2 to the white 3 here at the bottom, where again I only toggle on, in this case, the 0.382 and the 0.5, the most common targets for a wave 4. And it also has a bit nice confluence here with the low that we made earlier. So it would be nice to eventually, you know, wave 4 can be complex, can be rangy even throughout the weekend. But it would actually be nice to maybe move up and hit this key area, backtest this wick over here before then maybe going down for a wave 5 in this scenario. And that could then in this scenario be the end of C and the end of Z. However, what I would also like is if this is the X, that we then have this as a wave A, B, C. So in this case, it's going to be a 5 wave in the wave A, followed by a 3 wave C, and then a 5 wave or a 3 wave B, followed by a 5 wave in the C. And that is then the end of wave Z before moving to the upside. And a low time frame bearish count is basically the 1-2-1-2 that I just highlighted, with just a lot more downside to come. So yeah, hopefully guys, this was very insightful for you. I showed you all the pools, fib times, I explained a lot. I hope you find this valuable. It's a mix of educational as well as showing you all my Elliott wave counts. I think it was actually really fun to provide you with so much information, and I hope you value this. Please like the video if you think you got any value out of this video. And if you are interested, subscribe to my channel. I update the price, or I update you guys with a lot of videos daily. And I would love to be part of your trading journey. So that being said, thanks for watching this video, and I hope to see you at the next one, which will be tomorrow at 7 AM Central East European Time. Thanks for watching. Bye-bye.